In this video, we're going to talk about a company called Coherent, ticker COHR, and we are going to go over technical analysis. We will use an earnings model to determine whether or not it's undervalued, and we will also look at their Q2 earnings. They just reported Q2 earnings recently, so we'll go over that too, and we'll see if analysts have revised earnings up moving forward or down. And if that's something you're interested in, let's go ahead and get right into it. Okay, so we're talking about Coherent here, and it's February 10th, 2025. It's a Monday. This stock opened at 97.92 today, this Monday, and it closed on Friday at 95.89, and its current price is 91.80. To me, this looks like an opportunity right here, this pullback. It's only 1.52% above its 30-week moving average. So let's go. It does have a beta of 1.54 and its RSI is 48.18. So I'd like to see this go above 50 because that tells me strength, but 48.18 isn't bad. Our beta does say that this stock has volatility. However, this volatility is creating opportunity for us. So let's go ahead and get right into it. First thing we'll do is look at an earnings model, and I actually need to change this to 44% because that's what Finviz has projected, 44%. We are using that growth rate that Finviz projects and projecting it out for the next 5 years, and then for years 6 through 10, cutting that in half, and then we're using a 15% discount rate with a 15 terminal multiple. Now, trying to project out earnings growth over 10 years is very difficult, so take all these numbers with a grain of salt. But you got to use something to try to project things out. So that's what we're doing. The stock does have negative alpha over the last 3 months. And we talked about how it had a high beta, but you can see we were extended quite a ways away from the 30-week moving average over the last 3 months. And all it's done is just pull back. And it looks like kind of like a double bottom here on the 30-week moving average and turning back up. And now that we're pulling back, it's only Monday. We won't know what's going to happen for the next week of the 30-week moving average until Friday. So maybe it'll pull back and hit this again and then go up, or maybe it'll just go up from here. It's still early in the week and a lot can change. We are using the forward PE is projecting off of 2026, this number here. So our forward PE is 16 times. We have earnings of 440 with a 44% growth rate. If that was to come to fruition, what they have here, and we use that with the 44% for the next 5 years, and then for year 6 or 10, cut it in half, this would be a 360. This has a present value of $363. Now, if we just change this, say this growth rate is absurd and there's no way it can grow that much. And remember, this just became profitable. So the growth rate is in the early innings of growing. So this is very likely this could happen. But let's say you don't believe that. It can only grow, let's say, at 20%. This still would be an undervalued stock right now. The current price is 92.02. The present value is 105.76. Undervalued based on its earnings growth. Now, since we're talking about earnings, they did just report Q2 earnings, and I have some numbers here. Analyst estimates for Q2 were 69 cents per share, but they actually earned 95 cents per share, and that was a surprise of 26 cents. I pulled this from MarketWatch. For Q3, 3 months, their 3 month ago and their 1 month ago estimate for analyst estimates was 76 cents. Its current estimate is 85 cents. So that bodes well because Q3, their next earnings report, analysts are already revising higher. And then Q4, they've also revised higher from 83 cents 1 month and 3 months ago up to 90 cents currently. Now we'll take a quick look here at the daily moving average. We're going to use the 63 exponential moving average. We closed above that on Friday. We closed at 95.89. It's 90. The 63 exponential moving average 95.74. Looks like it actually has already gone up since I started this video to 92.24. The price, and we are negative. We're 3.65% below that exponential moving average. Now, if you just wanted to use the normal 63-day. We're about 7% below that, and that was we did close below that on Friday because it was 95.89, and the 63 is 99.39. So we would like to see that get back above that. We also want to see the RSI go back above 50. It's been below 50 here. Looks like it bounced just slightly above it here. We do have some big selling pressure here around January 28th that pulled it back. Now that's all daily time frames. Let's look at some weekly time frames. Now, if we look at the weekly time frame, which this is a 1 year chart of the 30-week moving average, you can see this has held the 30-week moving average for the whole year, with the exception of one period here on August 2nd. And it came just below it. It was about 50. It was the 30-week moving average was 60.41, and I think the price was 58.93. So it was very slightly that it came below it. And it's other than that, and when it did come below, we bounced right back above. So we know that over weekly time frames, the market ebbs and flows. So it goes up and down, up and down, up and down. So until this really breaks down from its 30-week moving average below it and stays below it, really breaks down, I won't believe that the uptrend is over here. I actually think it's just getting started, especially based on those earnings estimates I gave you and the earnings growth rates. So there could be a long runway here. And it looks like we're holding this, and it's going to either go well above this, or we may get one more bounce back to the 30-week moving average. For instead of a double bottom here, we'll get a triple bottom and then bounce from there. That's what I think will happen. Nothing here is a guarantee. That's just an opinion. None of this is meant to be advice. If we take a look here at the weekly MACD, you can see it goes up and down. The orange line is the MACD, the red line is the signal line, and this is on a weekly time frame. We're using the 5 and 35 exponential moving average for the MACD and the 5 exponential moving average for the signal line. This is getting pretty low. The lowest it's been is back here in May, 5.04. Right now it's at 8.12. So it is starting to converge together though. It started to converge away and then now it's converging back together. So hopefully this will continue from here to converge back together and eventually cross. And that would be a bullish signal that we're going higher. I just want to look at the support and resistance. This is about 42 days of data on a daily time frame. If we look at the resistance line here, that's about 107.55. The support line is 84.22. So you don't have a lot of downside for support. However, we did break below that back here on January 27th. But as soon as we broke down, we really gapped down here from 100.33 to 81.32. $81.32, but immediately we bounce back from that. So if we pull back here, I would expect it to bounce again from there. And that could happen on a daily time frame. We're on Monday, so lots of things can happen throughout the week, and then it could still close above or near the 30-week moving average at the end of the week. Now, if we look on a 5-year time frame, we can see this is in a long-term uptrend. Even though we go up and then we come down, and now we're going back up, but we're holding this 30-week moving average. So are we going to continue to hold this? I believe so. I could be wrong. We could also look at the 40-week. We're well above that 40-week, and we're very strong above that 40-week. There's about 10% of downside to the 40-week, and if we look at the 30-week, there's about 2.47% of downside. So even if it breaks through this 30-week, the next level of support would probably be that 40-week on a weekly time frame. The last thing we'll look at is the trend channel and the MACD and the Chaikin money flow, all on daily time frames. We can see this is in a long-term uptrend. It is on the bottom half of its trend channel. It did break below that here where we broke through our support level when I showed you on the other chart. Same thing here, 81.32. We broke below this yellow line, which would be a support level, but then came right back into it. And now we're at, we closed at 95.89 on Friday. And our support level for the trend channel, the lower end of the trend channel, is about 86.85. And the resistance level is about 122.37 or so, 52. And then we did cross, our MACD crossed, we have a bullish signal below the zero line, so that's positive. However, our Chaikin money flow is negative. That is below the zero line, so we do want to see that come above the zero line. This just means that right now it's in distribution. Institutions are distributing this stock. We want to get in when they're accumulating. However, all these levels tell me, I personally believe accumulation is coming in the future, but I could be wrong. So do your own due diligence. That's all I really have for you. I appreciate you taking the time to watch this video. If you liked it, consider hitting the like and subscribe button. Thank you again.